Hi, this is Ron Siegel. I wanted to first thank you for taking a few moments to watch this video. Since late 2006, 365 major U.S. lending operations have imploded, and as of this date there are 16 ailing watch list lenders. The U.S. government owns a majority of over 600 financial institutions. According to the chairwoman of the FDIC on October 13, 2009, bank failures to continue at a pretty good clip through 2011. Foreclosures reached an all-time high in the third quarter of 2009, up 23% from July to September of this year alone. U.S. consumer trends have been challenging for the better part of 2 years. Unemployment has been skyrocketing, investments in 401ks have fallen quicker than Niagara Falls, and consumer confidence is way down as well. Personal bankruptcy is up 33%. Mortgage defaults are going up. Revolving debt is at an all-time high. It is certainly understandable that you might have fears of moving forward. And why shouldn't you? After all, your home is arguably the largest asset and liability in your financial portfolio. And that is when it is the best of economic times. And as we know, this is not the best of economic times. Goodness gracious, has anyone watched the news lately? You can't hardly turn on a news show without hearing about some sort of economic calamity. Credit crisis, foreclosure, federal bailout. Pick your poison seems to be the talk of the day. For the past couple of years, many of us have left our financial statements sealed in their envelopes. We haven't even wanted to look at the documents. Immediately following Hurricane Katrina, former residents were asked, besides love, what would you say is the most important four-letter word that you can think of? The unanimous answer was simply home. And why is this? Because home is where the heart is. Let's take a look at a myth versus fact today when considering your financial planning. Something I hear so many people say is that they simply cannot do anything with their debt structure. This is so untrue. Today you can't afford not to be educated when it comes to your debt structure. In what can be said is an aligning of the stars and the planets. There are so many reasons to understand your entire debt structure. This includes all kinds of debt, secured and unsecured, from mortgage to credit card to automobile. There are no tax benefits at owning your home. There are tax benefits to properly structuring a home loan. We may never again see interest rates at the levels they are today. When you think about hiring an attorney or a doctor, if God forbid a loved one were sick today with some sort of cancer, needed brain surgery, or had some other life-threatening disease, would you be going to the yellow pages to start calling around for the cheapest quote? When you think about hiring a CPA, tax advisor, or financial planner, are you checking the classified ads to see who has the biggest ad or can write the catchiest headline? Again, maybe the cheapest practitioner, lowest payment plan? These all sound absurd. However, ironically enough, when we are getting involved with arguably the largest financial transaction many will ever get involved with, the primary concern is how cheaply we can get the services performed. Does this make any sense? I think not. As a trusted advisor, our relationship begins at the first interview where we are both going to evaluate each other to see if we have a fit that will match for life. As your trusted advisor, our relationship only grows from day one. Your goals and objectives are monitored and evaluated on a regular basis. With this understanding, you should be able to understand why we do not charge for this adoption and periodic rate watch report. Over the life of our relationship, we certainly will charge a fee for our service. However, that only comes after we have earned our title as your trusted advisor for the debt side of your personal balance sheet. When was the last time you heard from your mortgage planner? In most cases, the mortgage planner is like the guy that sold you your big screen TV. They answer all your questions until you make a purchase decision, and then they are never heard from again. I call this the one and done approach. I don't think there's any room in financial services for the one and done approach. In order for you to understand, you need a mortgage planner. You need to understand the responsibilities of the mortgage planner. There are 7 main roles of a good mortgage planner. You can see those listed here, but the main issue to understand is this is a lifelong relationship. I have some great news for you. Choosing the right mortgage planner does not cost you a dime. However, the reverse is that if you choose the wrong mortgage planner, it can cost you a lot, both in terms of time, potential aggravation, and worst of all, money. If you do not have a mortgage planner, I'd be willing to discuss this with you. As I mentioned before, a mutual relationship is key to the success of a long-term program. Once we review all the criteria, then it's time for you to make some decisions. If you want to have lower payments, lower rates, shorter or longer duration, maybe you are stuck in an option arm program that is going to recast in the next year or so. How can you make a decision without knowing your options? Periodically, we as your mortgage planner will send out a complete report showing you all kinds of options that are available in the marketplace. It is your responsibility to let us know if there are life changes that affect your personal situation. Life changes include paying or saving for college, retirement planning, job transfer, expecting a new baby, grandma's moving in. This is why we will sit down annually for a review of your profile and address any life changes. Although today's rates are quite attractive, your unique goals and objectives will determine the benefits of making a change or when you might want to make a change. In some situations, it's more lucrative to address college financing, home remodeling, or debt consolidation through the mortgage plan. The data shown here is that one of our clients, in his situation, a modest change to the program offered a savings of $268 per month. What would you do with an extra $268 per month? Many of us have that Starbucks habit. I have met people who have a $5 a day habit all the way up to a $12 a day habit. Do you understand that reducing your habit by 82 cents per day and applying that to your mortgage, you can take 8.5 years off the time it takes to pay off your mortgage? Without proper planning, you would have no way to know this. So again I ask, when was the last time your mortgage had a checkup? If you are one of the millions of American homeowners that has been orphaned by their mortgage professional, you probably don't know what the market has to offer. While I'm willing to show you what the market has to offer, this means nothing without knowing what your unique goals and objectives are. As of this date, we have over 47 million in mortgages under management. The first step to understanding if we are willing to adopt your mortgage will require us to get some very basic information from you. This one-page form will allow us to do a quick and basic analysis to see if we are right for each other. If you would like to receive this form, simply send an email to us, ron@mbehoa.com, with a subject line of adoption. Again, that's ron@mbehoa, Mary Boy Edward, Homeowner Assistance.com, with a subject line of adoption. I welcome any questions or comments you might have regarding our services and the mortgage option program. Please feel free to distribute this link to anyone that you think would benefit from our mortgage adoption program. This is Ron.